On the surface, November 13th, 2025 was probably one of the most boring days in recent market history. But what if I told you that just beneath that flat, calm surface, a multi-billion-dollar battle was absolutely raging? A battle that, believe it or not, reveals a massive shift in the power dynamics of the Indian economy. All right, let's dive in and solve the case of the flat market. So this was the number everyone saw. India's benchmark Sensex index moved up by, well, basically nothing. A rounding error, a total statistical yawn. But is that the whole story? You already know the answer to that. Not even close.
So let's officially open the investigation. How does one of the world's most dynamic, fastest growing stock markets, where billions of dollars are changing hands every single hour, end the day at a virtual standstill? It just doesn't add up.
Think about that for a second. The sheer improbability of this is kind of staggering. An index worth trillions, representing 30 of India's biggest companies, moved just 12 points all day. This isn't just calm, it's an unnatural, almost eerie stillness. It kind of hints that some really powerful forces were quietly at work. And here's our first clue. It turns out this wasn't a day of inactivity at all. It was a day of perfect, balanced opposition. It was like a giant tug of war where two immense forces were pulling the market in opposite directions, creating a perfect stalemate. So here's how that stalemate played out. In one corner, you've got this massive tailwind, record low inflation, good news on trade deals, political stability. Any one of these could have sent the market soaring. But then, in the other corner, you had an equally powerful headwind, intense profit booking after a huge rally. Traders were just cashing in their chips, and that selling pressure perfectly canceled out all the good news. But that tug of war, that was just the opening act. The main event was a hidden battle, a really colossal fight between two types of very powerful investors that truly explains why the day ended up so flat. So to understand this, let's meet the two heavyweights in this fight. First, you've got the FIIs, or foreign institutional investors. Just think of them as the big global players bringing money into India from all over the world. Then you have the DIIs, the domestic institutional investors. That's our home team, investing the savings of millions of Indians through things like mutual funds and insurance. Now, for years, the global money, the FIIs, they called the shots. But on this day, that changed. This data from the day before, November 12th, is our smoking gun. Just look at the sheer volume of money moving around here. We're talking tens of thousands of crores in a single day. But ignore the big buy and sell numbers for a second and just focus on that final column, the net figures. That's where the real story is. And here it is, the result of that secret battle. On a net basis, foreign investors were sellers. They were pulling out almost 1,750 crore rupees. Now, an outflow that big would normally send the market tumbling, but it didn't. So why not? Because our domestic institutions, the DIIs, they stepped in and bought a massive 5,127 crore rupees worth of shares. They more than absorbed all that foreign selling and then some. And this isn't just a one-off thing. As this market report points out, our domestic investors have become this powerful safety net for the market. They are providing what's called an essential floor, basically preventing big drops even when foreign money is heading for the exits. This is a profound change in how our market works. Okay, so if the big index was flat because of this huge institutional battle, what was actually happening to individual stocks? Well, that plus 0.01% number was just an average. Underneath it, there was a completely different story of some clear winners and some clear losers. And here's the next critical clue. The big, stable highway, the large cap Sensex companies, that was flat. But the smaller, more winding roads, the mid-cap and small-cap companies, they were actually heading downhill. This shows a really clear flight to safety. Investors were moving their money out of smaller, riskier companies and into the stability of those big blue-chip names. So where did all that money go? Well, it flowed into sectors that had strong individual stories going for them. Metals were on the winner's podium, climbing thanks to rising global commodity prices. Realty and pharma were right up there with them, feeling good because of a positive domestic outlook. And on the flip side, PSU banks took a bit of a hit from all that profit-taking. And the IT sector was under pressure, mostly because global tech stocks were having a weak moment. So the big takeaway here is, while the headline looked incredibly boring, capital was actually moving very aggressively between different parts of the market. Okay, now let's connect all the dots. This tug of war, the secret battle between big investors, this rotation between sectors, It all points to one massive, underlying trend, a huge structural shift in who really controls the Indian stock market. And here it is. This is the aha moment of our whole investigation. For the first time, domestic institutional investors now own a bigger slice of the Indian market than their foreign counterparts. DII ownership is at an all-time high, while FII ownership is near a 13-year low. This isn't just a statistic. It's a changing of the guard. And the implication of this is just huge. For decades, the Indian market was heavily influenced by the whims of foreign capital, right? It could be pulled out at a moment's notice, causing a lot of volatility. But now, the market is becoming more and more anchored by stable, long-term domestic savings flowing in through our own mutual funds and insurance. This creates a much more resilient and stable foundation. So let's bring it all home. What looked like a day of absolutely nothing was, in fact, a powerful demonstration of the market's new hidden strength. So let's just trace our investigation real quick. We started with the mystery of a flat market, and we just peeled back the layers. First, we found the stalemate between good news and profit-taking. Then we uncovered the secret battle where domestic money completely overpowered foreign selling. We saw how that flat average was hiding a major rotation between sectors. And all of this led us to the final conclusion, the rise of the domestic investor as the new anchor of the Indian market. And that brings us to our final thought. That seemingly boring day, November 13th, was really a microcosm of a much, much larger trend, a trend towards greater stability and self-reliance. And it leaves us with a really provocative question to think about. As the Indian market becomes more anchored by its own savings, is our economy on a path to becoming, shock-proof from the volatility of the outside world? It's definitely something to think about.